Grok has 20 stones of dried meat stored for winter, and he lends 5 stones to Thog, who promises to return 6 stones after the next hunt. So Grok thinks he's discovered something brilliant. He can eat his meat and have more meat, and Thog takes those 5 stones and lends 3 to Oog, who will return 4. But here's what nobody notices. There are still only 20 stones of meat total in the cave. The number didn't change. The promises changed. And now 3 cavemen think they own 30 stones between them. The math stopped adding up the moment the second loan happened, but everyone's too busy counting imaginary meat to notice they're building a system where the promises outweigh reality by a factor that grows every single day. I'm going to explain the Great Depression through a cave, because what happened in 1929 wasn't some mysterious economic virus. It was a mechanical system that broke exactly the way it was designed to break. You need to understand one simple structure first. Think of the tribe's economy as 2 piles. Pile 1 is real stuff. Actual stored meat, actual spears, actual furs. Pile 2 is promises. Debts owed, future hunts pledged, claims on meat that doesn't exist yet. And in a healthy system, Pile 2 stays smaller than Pile 1. You can borrow against future hunts, but only if those hunts are reasonably certain. The problem starts when Pile 2 grows faster than Pile 1, when the promises multiply beyond what the tribe can actually produce. In the 1920s, Pile 2 was growing like crazy. The tribe had just survived a brutal war. World War I was basically a 4-year winter where half the hunters got killed and everyone burned through their stored resources. So when it ended in 1918, the survivors were exhausted but optimistic. They started rebuilding. And the shamans, the guys who controlled the meat lending system, they had a new idea. They'd make it really easy to borrow meat. Super easy. Because if everyone could borrow and spend, the whole tribe would hunt more, store more, get richer together. Sounds reasonable, right? But here's where the incentives get weird. The shamans didn't just lend their own meat. They created a system where they could lend meat they didn't have as long as they kept a tiny portion in reserve. Let's say a shaman has 10 stones of meat. Under the old rules, he could lend out 10 stones. Under the new system, he could lend out 100 stones, keeping just 10 in reserve. And the beautiful part, for him, is that he collects interest on all 100. He's getting paid on 90 stones of imaginary meat. So what happens? Every caveman can suddenly borrow way more than before. Grok wants to expand his hunting territory. He borrows 50 stones. Thag wants new spears. He borrows 30 stones. Ugg wants to build a bigger cave. He borrows 40 stones. And all of this works perfectly fine as long as one condition holds. Everyone has to keep believing the promises are real. And for most of the 20s, they did believe. The tribe was hunting well, winters were mild, new hunting grounds opened up, so the shamans lent more, and cavemen borrowed more, and everyone looked at their piles of promise stones and felt wealthy. The stock market, which in cave terms is basically the tribe's betting system on future hunts, went absolutely insane. Between 1925 and 1929, the value of future hunt promises roughly doubled. If you had 100 stones worth of claims in 1925, you had 200 stones worth in 1929. But remember, Pile 1 hadn't doubled. Actual meat production grew maybe 20%. The promises were growing 4 times faster than the reality. So you're asking yourself, why didn't anyone notice? They did. A few paranoid cavemen saw the gap widening and tried to warn people. But here's the thing about Pile 2 economics. As long as everyone keeps playing, it doesn't matter that the math is broken. If Grok lends to Thog, who lends to Ugg, who lends back to Grok, they can keep the circle going forever. The only requirement is confidence. Everyone has to believe everyone else will pay back their meat. And in 1929, that confidence broke. It didn't break all at once. It started with the farmers. See, during the war, the tribe needed massive amounts of food, so farmers borrowed huge amounts to expand. They bought more land, better tools, hired more workers, and that worked great while meat prices were high. But after the war, Europe recovered and started producing their own food again. Suddenly, there's too much meat. Prices dropped. And farmers who borrowed 50 stones when meat was expensive now had to pay back with meat that was worth half as much. They couldn't do it. By 1929, farms were failing at a rate nobody had seen before. But the tribe didn't panic yet, because farmers were like, I don't know, the weird cavemen who lived on the edge of the territory, their problem seemed isolated. The hunters in the main cave were still doing fine. The shamans were still lending. The stock market was still climbing. Then October came. On October 24th, 1929, something shifted. A few big cavemen, the ones with massive piles of promise stones, started to get nervous. They looked at their claims and thought, wait, how much of this is actually backed by real meat? And they started selling, converting promises back to real stones. And when big cavemen sell, other cavemen notice. By October 29th, the panic was full blown. Everyone was trying to sell their promises at the same time. Here's what that looks like in cave terms. Imagine 100 cavemen all show up at the shaman's cave at once, waving their promise stones, demanding their meat back immediately. But the shaman only has 10 actual stones of meat. He lent out 90 stones worth of promises, so he can pay back the first 10 cavemen. The other 90 are just standing there, realizing their promises are worthless. The stock market lost $12 billion in value in a single day. 12 billion. That's not a cave number anymore. That's an entire civilization's worth of stored value just evaporating because everyone realized simultaneously that pile 2 was built on nothing. But you might think, okay, that's bad for rich cavemen who gambled on future hunts. What about regular cavemen? Here's where it gets really interesting. The collapse didn't stay contained. It spread through the entire economic system like a sickness, because all those promises were connected. The shaman lent to Grok, who lent to Thog, who lent to Ugg. When Ugg can't pay back Thog, Thog can't pay back Grok, and Grok can't pay back the shaman, so the shaman goes bankrupt. And when shamans go bankrupt, they stop lending entirely. And when they stop lending, cavemen can't borrow to buy new spears or expand their caves or hire workers. So production drops. Hunters get laid off. Those hunters can't buy meat. So the cavemen who were selling meat have less income. So they lay off more workers. It's a spiral. By 1933, the tribe was in full collapse. 25% of hunters had no work. 25%, that's 1 in 4 cavemen just sitting idle because the promise system that used to connect their labor to stored value had completely shattered. Banks, the shamans, about 9,000 of them failed between 1929 and 1933. 9,000. These were the institutions that held the tribe's savings. When they collapsed, cavemen who thought they had 50 stones stored up for winter logged in to check their accounts and found 0. Let me give you one specific caveman's numbers so you can feel how this worked in practice. Meet Grok. In 1928, Grok was doing well. He had a small hunting operation, employed 5 guys, brought in about 2,000 stones worth of meat per year. He had saved up 10,000 stones in the shaman's cave. He owned his shelter outright. He owed nobody. By 1932, here's Grok's situation. His hunting income dropped to 400 stones per year because nobody could afford to buy meat. His 10,000 stones in savings were gone. The shaman who held them went bankrupt. The tribe seized his shelter because he couldn't pay the new tribute taxes. He was living in a shared cave with 12 other families, fighting over scraps, wondering what he did wrong, and the answer is nothing. Grok did everything right. The system was just designed to eat people like him when Pile 2 collapsed. The tribe's leaders tried to fix it, but their solutions made it worse. They thought the problem was competition, so they made it harder to trade with other tribes. Tariffs, they called it. If outside tribes were selling meat cheaper, the leaders would add a penalty cost. This was supposed to protect tribal hunters, but it backfired completely. Other tribes retaliated. They put tariffs on the tribe's goods, so now everyone was producing less and trading less. Global trade volume fell by 50% between 1929 and 1932. 50%. The tribe wasn't just failing internally, they were cutting themselves off from everyone who might help. And here's a fun little cutaway for you. Imagine 2 shamans meeting in 1933. First shaman says, the solution is simple. We just need everyone to have more confidence and start borrowing again. Second shaman nods. Absolutely. How do we do that? First shaman pauses. Well, We lend to people who can pay us back. Second shaman says, right, but those people don't need to borrow. They already have meat. Long silence. So we're fucked. Completely. The tribe stayed in depression for an entire decade. An entire decade. It wasn't until they started preparing for the next big war, World War II, that production ramped back up. And that's its own kind of dark irony. The tribe couldn't figure out how to coordinate resources to feed and house their own people, but they could mobilize everything efficiently when it came to killing people in other tribes. The Great Depression killed the global economy for 10 years. It created the conditions for Hitler to rise in Germany, where unemployment hit 25% and desperate cavemen were willing to follow anyone who promised to restore order. It led directly to World War II, which killed 60 million people. 60 million. That's not an economic statistic. That's entire caves full of families just erased. And the core cause was simple. The tribe let Pile 2, the promises, grow so much bigger than Pile 1, the reality, that when confidence snapped, there was nothing underneath to catch the fall. Now you might be thinking, okay, that was bad, but we learned our lesson, right? We have safeguards now. We have the Federal Reserve, deposit insurance, regulations, and yeah, we do. But here's the uncomfortable part. The basic structure hasn't changed. We still run on a fractional reserve system. Shamans still lend out way more than they hold. Pile 2 still grows faster than Pile 1. We've just gotten better at managing confidence. Every time it starts to crack, the central shamans step in, add more promises to the system, and hope confidence holds. 2008 was a test run. The housing market was Pile 2 growing faster than Pile 1. When it collapsed, the Fed pumped trillions into the system. Trillions. They basically said, we'll add enough promises to cover the gap. And it worked, kind of. The market recovered. But Pile 2 got even bigger. And in 2020, when the pandemic hit, they did it again. More trillions, more promises. And Pile 2 is now so much larger than Pile 1 that I genuinely don't know what happens when confidence breaks this time. Here's your 3 takeaways. First, debt is a claim on future production. If you can't produce enough in the future to cover your debts, the math doesn't work. This applies to individuals, companies, and countries. When everyone's income is falling, debt becomes a death trap. Second, diversification isn't just about assets, it's about systems. If your entire net worth is held in promises, in a bank account, or stocks, or bonds, you're exposed to the same collapse risk Grok faced. Some portion needs to be in stuff that holds value, even when confidence breaks. Third, watch Pile 2. When credit is growing faster than GDP, when debt is expanding faster than production, when promise stones are multiplying faster than real meat, you're in the danger zone. It doesn't mean collapse is imminent, but it means the gap is widening. And the wider the gap, the harder the fall when it closes. The Great Depression wasn't a random catastrophe. It was a mechanical outcome of letting promises outgrow reality. The tribe built a system where everyone could feel rich by borrowing from a future that couldn't possibly deliver. And when reality showed up to collect, millions of cavemen lost everything. The shamans learned some lessons. They added guardrails. But they didn't change the core game. We're still running on borrowed time, just with better marketing. And every time I see another headline about record debt levels or unprecedented stimulus, I think about Grok standing in that shaman's cave, waving his promised stone, demanding his 10,000 stones of meat back, and slowly realizing the pile was never real. Nature always collects. The fire goes out, the meat pile shrinks, and when morning comes, the rock you pushed uphill yesterday is sitting at the bottom again, waiting. This is a simplified cave story to explain a modern system.